Welcome, everybody. We have another session today, and this time we're focusing on VCs investing in Web3 startups. I had a preparation call with Justin, Brian, and Anatoly, and I would say 1 hour or even 2 hours will not be enough, probably, to just the level of questions we came up with. But I think in terms of value to you, and it's this, to open those questions and to have this discussion in the air. And without a doubt, we are, I think, in the beginning of something new, and all the cliches, I think, can work here beautifully. You know, I remember when I was about 30, my father called me and he asked me, he said to me, Amir, I think, you know, you're working too hard. You're not going to have time to make money. Yeah, I think probably some of the startups we have on the call now can relate to that. I would assume our panelists are already there. Yeah, they're already working less hours. I had a podcast last week with a guy who's working 20% of the day. So yeah, interesting chap. But I think today we would like really to explore the new opportunities and the vibes, the trends of investing in Web3, and really outstanding panelists today. I would like maybe to start, Justin, start with you. I want to really ask you a quick question, and maybe Anatoly and Brian can relate to that. And it's about whether this hype is real around Web3. I had an investor chat last week, and a fairly old guy, even older than me, can you believe it? And he said, Amir, you know, I've been there 10 years ago. There was the big hype about 3D in cinemas. What happened to that? Disappeared. Yeah, we all, you know, we had glasses, and maybe it's another trend. And so starting, you know, to get the energy high, Justin, maybe you can introduce yourself a little bit and share with us, you know, with all your 23 years of experience, if I get it right, is it another, a trend, or is it something real that is coming up? Please.
Thanks, Amir. Great to be here, everybody. Thank you for inviting me. It's a great question. It's a great way to kick off the conversation. I mean, I think, you know, we all have been working in technology, and this is a question that comes up on a daily, weekly, monthly basis whenever you're looking at a business, or you're looking at what is allegedly a trend, or I think we've realized over time, I think that sort of we kind of perhaps sort of overestimate the kind of the short term sort of and underestimate the long term impact of this stuff. So, you know, going back to kind of the beginnings of Web 1, the same question you could have asked me then, Amir, if you were old enough to ask me that question, then I'm not sure. You know, Web 2, the same question. Web 3. Right now, you know, this question is being asked, and I think, you know, you just have to kind of look at history to I suppose, in a sense, sort of really answer that question in terms of, you know, playing back clips of Bezos being interviewed and so on and so forth, to kind of get a sense of kind of, you know, just how fundamentally kind of, you know, exciting the world that we're kind of moving towards is. And like all worlds, there's going to be winners and losers, right? And I think that is also very much kind of the case. So for me, I think it's all about sort of your definition of kind of what is hype, and you know, and also I think what your definition of Web3 is, which is a really interesting kind of conversation for all of the panel, hopefully to kind of cover today.
Hey, Amir, I got to jump in here, man.
Please.
This is not hype, okay? There are tens of millions of people doing things on the blockchain today, maybe as simple as just buying some cryptocurrencies, some Bitcoin in their in a wallet, or maybe buying an NFT. Amir, put it on the blockchain. I will have the receipts. In a decade, Every human with a smartphone will have something on the blockchain on their phone. I'm talking 3-4 billion people, whether it's your house deed, your car title, some digital collectible, tickets to a sporting event. Everyone on this planet will have experienced Web3 in some way in the next decade. Book it here, write it to the blockchain, make it immutable, put it with my name. That's how strong I believe it.
It's all recorded, Brian, but maybe Justin, just if you can introduce yourself briefly, and then Brian, then Anatoly, so people can get the perspective.
Yeah, so I'm a venture partner at Northzone, which is a technology early stage investor, about 1.4 billion euros of assets under management. Been going for more than 2 decades. Most recent kind of investment sort of relevant to this space is the gaming company Goals, which is building a multiplayer football game where players are kind of able to basically kind of buy football players, soccer players as NFTs, and that was a 15 million kind of seed round. Long history of kind of operating kind of at the edge of kind of early stage kind of tech. So that's kind of Northzone and me as an early stage investor.
Great stuff, Brian.
Yeah, I run a group from Atlanta, Georgia here in the US called Beyond the Game Network. We're a group of 30 former pro athletes, mostly NFL, American football players. We invest in sports and media and gaming, Web3, and in fitness and health and wellness. We made 19 investments over the last 3.5 years from seed to Series B. And relevant to this conversation around sports and Web3, we're investors in Sports Icon out of the UK that does athlete NFTs and is launching a new sports metaverse. We're investors in Green Park Sports out of LA, which is a sports metaverse partnered up with the NBA, MLS, and La Liga. And we are investors in fan-controlled football, which is changing the world of football and fan interactions, huge integrations of NFTs into what they're doing. So we're big in the space. We love the space. We think there's amazing things happening here.
Cool. Anatoly, please.
Yeah, hello everyone. Thanks for inviting me, Amir. Just a quick intro. I'm a vice president at Indigo Sports Tech. We are a sport tech fund, as you can know from the name, focused mainly on Europe and mainly on seed or Series A stages. We have done in total 13 investments in this particular area. We have now 3 exits. I kind of represent more skeptical arm of VCs in this dialogue about Web 3.0 and about
Please
NFTs. Because we haven't done yet investments. We keep looking, and I think that answering your earlier question, that definitely it is on the map already of all VCs. Definitely everyone is looking at it, and definitely millions of people are using it. But so was Clubhouse some time ago, right? And so to in order not to repeat the fate of Clubhouse, the industry as a whole shall, of course, find its own definition, how it is useful to people, and to bring more and more real value. Then the momentum will keep going, and hopefully will arrive to the future which colleagues have been describing. That would be the short end for me.
Before we jump in, I want to just some of the numbers. Maybe we are familiar with this, but just to see it again. Just in 2021, $9 billion investment in sport tech, direct investment in sports tech. The 10 leading companies, biggest companies, valuation is 49 billion. Yeah. And the NFT market, general NFT, not just sports tech, general NFT grew from 100 million in 2020 to 21 billion in 2021. And of course, the metaverse, as we can see here by Bloomberg's, estimated to go to 800 billion by 2024. Now, before we have to make it a little bit more, I would say, exciting, we have a poll which we would like to use the crowd wisdom here. So all our guests, be ready. There will be a poll coming up very soon. Daniel, if you're there, you can share the first question. All you need to do is choose your right answer, yeah, and then we can share in the end the answers just to see. So which Web3 vertical do you expect to grow the fastest? NFTs, metaverse, platforms, AI and other, please put your comment. Take a second, put it in. Let's see where we are. Which Web3 vertical do you expect to grow the fastest? All right, second poll, Daniel. Second poll, what is the biggest stopgap preventing adoption of blockchain and Web3? Why people are holding on? Energy consumption, lack of education, hacks and scams. Other, please add your comment. Take a minute. What are the biggest stopgap preventing adoption of blockchain and Web3? Good, excellent. Daniel, thank you very much. By the end of this session, we will share the outcomes, see what the crowd is thinking. We have 161 people here, so it will be interesting to see the outcome here. I want to ask the panel now in terms of investing in Web3, and is there any difference? I know you've invested in some of them. Anatoly, I know you're screening a lot. We are now just got about 400 applications for the new Web3 program. I can tell that the valuation is different. So valuation overall is a little bit higher than, I would say, general sportech startups. But do you think there is a major difference in terms of investing in Web3 startups? Let's start, Justin, please.
Well, I think in some ways there are things that have not changed, and there are some things that have changed, I'd say. So it's like slightly on the fence maybe, but I think the things for us and for me, I think really ultimately kind of, the first thing I would sort of do is actually rephrase the question, which is what are Web3 startups looking for in an investor, right? Because when you've got a DeFi kind of a decentralized kind of model, you've got access to capital. So what in theory, right? So what are you actually looking for in an investor? And so for me, every conversation I start with an entrepreneur is like, that question is asked from me to them to try to find the right fit. And I think, for sure, it's got to be today more now than ever than about the capital, right? So that's the first thing I think that's changed. I think what's remained the same is for me and is really backing people, right? Backing teams, backing ultimately the folks who are gonna, grind and work to kind of make this business a success, and backing the team is absolutely everything for us. I think alongside that or below that is absolutely the kind of the market size, which in this case, and I think the point Anatoly makes about sort of the fact that he's still sort of like kind of screening and is around how do we define the market size and the market opportunity in this thing, right? It's a very, very, very difficult thing to kind of get your teeth around, and I think that is a moving target, right? And you've placed your bets, which is what this is all about in some ways. I think the other thing that that has remained the same, but again is very difficult in this world, is differentiation. Like how do we see that, right? And in looking hard about that. And clearly the other thing is for us is obviously evidence of traction. So for me, they're the main kind of things that kind of we think about.
Yeah, I'll add it to it. The investment thesis and process is the same here as it is anywhere else. It's, team, product, go to market, market size, opportunity, and competition. It doesn't change. What changes is Web3 moves at a lightning pace. It's like dog years, right? You can do as much in 1 year as you can in 7 years of another product. And the valuations, while they sound crazy, you're hearing pre-seed deals getting done at 20, 30, 50 million valuation. The reason is that the revenue acceleration in this type of product versus a subscription sports or fitness service, it's just night and day. You know, we're seeing companies' first launches doing 1 million, 3 million, 5 million in revenue with margins in the 50, 70, 80% profit margins on those revenues. That's just not possible in an app. I guess it's possible, but we've just never seen anything like that in a subscription-based app service or some type of fitness or sports training or fan engagement product. Nobody makes money at that speed. And so things are just different here. You know, when we look at the founders, you're looking for people who really deeply understand the Web3 community, people who are participating in it, people who have contacts and relationships. The same way I wouldn't want to invest in a fitness tech founder who didn't work out and didn't have experience as a trainer and didn't work in the sports space and didn't have those contacts. I don't want to invest in a Web3 founder who this is, you know, just woke up one day and decided to add Web3 to their startup. So we're looking for the same things: team and product, traction, go-to-market strategy, size of market opportunity. It just all happens so much faster in the Web3 space.
Maybe one thing that I would add, and I totally agree with Justin and Brian, that you know, it is people first and it's moving at you know, speeds. But maybe one thing that is different is that you know, when you invest in more traditional sport tech like B2B software, you go and talk to clubs, to federations, you know if it is useful or not, even if they have just one user. With you know, with hardware, with apps, you go and test the hardware in the app, and you know immediately if they're useful or not, even if they have, you know, thousands of users, right? In this case, basically, you don't know whether the thing will work or not before it is actually launched. This is point number one. And point number two is, you know, some founders are natural marketing geniuses, which is super cool, and they can do, you know, a super cool first batch of, you know, whatever. But a super cool first batch of whatever doesn't guarantee you that people will, you know, keep you know, trading with the stuff as in NFTs, or will keep visiting these virtual arenas, right? So my point basically is that I would expect this market to be a bit more concentrated, you know, around the winners than the other segments of sport tech, due to these specifics that I mentioned.
I totally get it. And I think maybe just to add on this, there is also this, I would say, when you have a sport tech product or a service, usually fairly easy to implement and to do a pilot. Here, some of the solutions, maybe, you know, it will be a little bit more challenging to explain to the brands, the clubs, the federation, how this can be implemented. Yeah. And so there could be a challenge there. And as you said, this also sometimes is a stopper for the brands to implement it, because they cannot really see how they can immediately monetize it. Yeah. And here I think there is a lot of maybe preparation and a, you know, well thought process for the entrepreneurs, for the founders, how to create their value proposition accessible to the brands, the clubs, the federation. So it's a no-brainer. So it's an easy decision to make. It's not, okay, this is our platform now. It's a new NFT trading platform. Good luck. It's like, how can we make work with you, Bundesliga team, to allow you to, you know, to get a little bit more traction with your fans, more loyalty, more fun gamifications, and how this can impact what you guys are doing, and it's in line with your vision. Now, some of the questions coming from, sorry, Brian, I wanted to say
just quickly to jump in there, you know, Amir, I think if we had this conversation a year ago, the skepticism level for teams, clubs, leagues would have been all the way to the skeptic side. But, you know, with these large successes of NBA Top Shot and NFL All Day in the US, with So Rare with the European soccer clubs, and Socios with their fan tokens, you know, individual teams and athletes, the skepticism is down. People are now looking at this. You've had, you know, prominent NBA owners like Mark Cuban come out and say that, you know, digital assets could be the third biggest revenue stream for NBA clubs going forward, behind their TV deal and their in-venue, you know, ticket sales. And so, look, I think people are much more open today than they were a year ago, rightfully so. We've seen obviously billions and billions of products sold to consumers, to fans, bringing them closer to the sports they love. So there are still skeptics out there for sure. And there are still going to be teams and leagues and owners that just don't understand it and don't want to understand it and think it's overhyped fad. But the way the big leagues have moved, it's just changed so fast. All this has happened in the last year and a half. And these are not typically fast moving first mover groups like EPL and La Liga and NBA and NFL. They usually wait to see what's happening. They're not waiting this time. They're jumping in.
And we saw, I think, yesterday that the Italian Serie A is starting to look at metaverse seriously. So yes, absolutely. So something is happening with the, decision-making process and the willingness of the brands to jump into to pilots here. And I hope it's not just the big checks that those big, I would say, new companies, relatively new, the Dapper Labs of the world, they worth, I would say, a lot of money, but they're fairly young, still. So I think like 6, 7 years, some of them. So, and this relates to what you said earlier about how fast this industry is going. Now, one of the conversations we have with our startups from, I would say, from our alumni, that they're considering to pivot to Web3. I would say some of them believe that it's just sexier to do that, and it will get some more attention from investors, but some really believe that this is where it's going. So as an investor, how do you see this? If there is a startup which is working now for 5 years, they have a great product, and you can hear conversation about Web3. Anatoly.
Yeah, if I may jump in, thank you, Amir. Look, I would say actually that in the current reality, maybe this is even better than starting something from scratch. I would illustrate it with the recent example of one football raising like 300 million or something for to expand into metaverse and probably launch their own NFTs and etc. And basically, why did they do it? Because they have 100 million users and they have terabytes of cool video that people are actually watching. So basically, they have an asset, if you will, that they were monetizing in one way, but they can monetize it now in another way. And of course, OneFootball is a super big example, but there are many others. There are companies, let's say, in sponsorship, if you will, or in automated production of some videos, or WSC in highlights that have first access to something or unique access to something and some audience. And look, it seemed like a very logical move for them. And I actually see, again, with the disclaimer that Justin and Brian are much more experienced in this. As an impartial party, if you will, I see here a lot of potential, and also there is potential to fight those, the big guys that emerged and that have been already named. Fight not on their ground and not fighting an uphill battle, but suggesting something unique. So that would be my take on it.
Justin.
I'll jump in real quickly here, and then Justin, you can take it from there. But yeah, look, Amir, it's tricky. If you've built a traditional business model that has nothing to do with Web3, and you wake up one day and are like, hey, there's a lot of cash flopping around out here, I want some of that. Or the valuations are a lot better if I throw Web3 in my pitch deck. And that doesn't work. And we've invested in a half a dozen companies that are in the gaming and the video gaming space, in and around sports and entertainment. And that marketplace has been anti-Web3 and vocal, and have voted with their feet, walking away from companies like Discord, Unity, Steam, very large players in the gaming space have announced NFT or Web3 integrations. They've had huge backlash from their customer base. And it needs to be done in a way that's authentic. You can't take a non-Web3 team and be like, hey, we're just going to throw a token out there. That's a disaster. And it's never going to work.
We are doing also an NFT on that.
Yeah, exactly. You need
totally.
You need to bring in people who are Web3 native.
It can be done, but it has to be done, I would say, with a long-term vision on that. and
you have to educate your
strategy.
customer base. You have to show them the value add. You have to bring in the right people. You have to build community around why the NFT or token makes sense for your customers. You can't just be like, we got a good customer base. Let's just drop an NFT and make some cash. That doesn't work.
Yeah, I absolutely agree with Brian. You can smell a rat from a mile off, right? And the last thing you can do is put a band-aid on a business. I think that's really important to sort of just mention. I think there's also people that have been around for like 20 years doing this stuff as well. Like, this is not a new thing. This has been around before the phrase was coined, right? And I think there's also people who they were building the blocks upon which we stand today, and those folks are in some cases I think have had the kind of very much kind of cultural mindset from the very outset baked into their businesses, and so they're now starting to really thrive. And it's great to see that like we all know, timing is so important in these things, and it's great to see some of those folks kind of thriving. Like there's a British business called Blipper, which was kind of one of the pioneers in AR, which has been really working hard and now coming to the fore, really building the very kind of base of the kind of the layers of the metaverse for brands. And then I guess you've got on the other end, you've got companies like Goals who are thinking about sort of how they can try and dislodge incumbents and sort of kind of on the other side of things. So you've got the new who've been born sort of in the last sort of 12, 18 months, as Brian said, during this enormous kind of momentum we've all seen. But then you've also got the long-term players who have had that right mindset from the very beginning.
If I may just add something for the record, look, not to be antagonistic here, I just wanted to underline that, of course, just slapping a sticker, I have an NFT now, or I'm now pivoting to Web3. It's a no-go for sure. Like it smells that something is not right here. So basically, my point was that we are in a probability business, right? And you have an asset which is how to put it, Web3 zeroable. There is no word like this, but I will invent it. Then it may work, and it has very good chances to work. But of course, you have to actually have the start, the mindset, and the skills to do this for sure.
Excellent. I want to dive into in a minute on your specific taste and appetite for startups, and ask you about what are you looking for, and also how people can reach you. But I want to take about, we have, I would say, among our guests here today, we have startups, we have investors. I want to talk specifically at the moment for a couple of minutes on an opportunity which I don't want startups to miss. This coming Monday, we have a session where onboarding session we just added for startups in the Web3 to be able to pitch to those brands. We have already 93 brands registered for those sessions, the top brands in the sports. Not all of them are here. And I think what we hear from Anatoly, Justin, and Brian, there are tons of opportunities coming up, but if a startup is coming, especially in Web3, with a successful pilot or a commercial agreement with a top sport brand, it's definitely add to the credibility and to the ability to get yes from investor. And just to touch on this, this is just an example of some of the brands and the way they chose startups to explore the possibility of pilots. And what can this do in 3-4 months' time? If you have 3-4 pilots happening, what the impact that can be on your valuation and your ability to raise money. This is some of the experts, the mentors. We have over 150 mentors, part of the HYPE ecosystem. 40 of them have a equity agreement with us. So the commitment is there to support you long-term, not just to pop in for a nice session. As some of you know, we've initiated with the leadership of Pini Listenberg, the investment club. We now have over 200 investors, where we are in ongoing engagement, understanding exactly what they're looking for, and we can co-invest together and work together around the best solutions in the market. So just on that, I would like to ask the startups that are still would like to be part of the onboarding session on Monday. Daniel will put here on the chat the link to the registration, so you can pitch to those brands, whether you're anything to do. By the way, it's Web3 oriented, but we allow few amazing startups which are not Web3 also to sneak in. So you have now, basically you need to fill up this form. It will take you 30 seconds. My request is you do it now. Just put your name so you're not missing it. Can you see that? Yeah, Daniel just put it here. If you already filled up the first stage, and if you got successful there, you got the second stage, please fill it up today. Because tomorrow we have a session where we are wrapping up the shortlist, so you can present and you can be part of the onboarding session on Monday afternoon. Do you accept my request? Yes, no? All right. Yes, thank you, Patrick. Doing it now, good. Thank you, thank you. You know, it's like the story about the lottery. You need to fill it in, yeah? You need to fill the, you know, to fill the form. Amazing opportunity, thank you. Kian, Tim, thank you. All right, I wanna come back to you, and I know, Justin, you're writing fairly big checks, I would say, you know, speaking about early stage. And I want to understand, if I'm a startup now in this crowd and I want to impress you, I wanna create relationship with you, I wanna, you know, get into a long-term relationship with you. How does it work? And what are the do's and don'ts? What do I have to have in order for you to, I would say, to meet me at least for a second meeting?
Yeah, I think the first thing goes back to the first sort of point I made earlier about sort of why North Zone, why Justin, what are you looking for? And so do your research, right? And come kind of armed to the table with a point of view about why you want to have a specific conversation. That gets through so much of the noise, right? You know, if Brian gets a well-researched reach out, ideally through a colleague or a post he made, or you know, a point he made on this webinar, or whatever, right? That's going to get him the person, the traction that he or she needs, right, as a starter. So I think that's really important. Just as you would be if you were trying to pitch to a customer or an end user, right? It's the same when it comes to kind of investment. I think much of what we've talked already about sort of backing teams and market size and traction, obviously all of those things are kind of completely kind of relevant. And then let's dig a little bit deeper. Let's go a little bit sort of into the weeds, because it's important. I think right now, what is kind of exciting for me personally is many of the challenges that you had in your polls are the solutions that we're all looking for, right? So, you know, you come with solutions to the challenges around trust, credibility, education, you know, you name it, right? Those things, they're all very, very bankable. They are the points of friction that we're all sort of facing that are the inhibiting growth, I suppose, in a sense. So there's that type of approach that sort of always gets, you know, my attention. From a sort of, you know, kind of I love Brian's point around the domain expertise, you know, someone for me who literally has lived and breathed the thing that they're coming to talk to me about. And they've rolled their sleeves up and they've sweated the blood and the tears to kind of get to kind of where they are today. And you cut them and they bleed what they're talking about is a great sort of very energizing kind of way to build traction with investors. I think, you know, specifically, I personally am really interested in the wider kind of creator economy. I think that's really interesting for me at the moment. I'm very interested in the bridge between kind of physical and digital. So the phygital kind kind of aspect of that, and specifically kind of how we move into kind of real world kind of asset classes. That is also something that I'm very, very interested in terms of that bridge between the two worlds in which we're kind of operating. I think that intersection between sort of gaming, kind of metaverse, and crypto again is something that sort of I'm very, very interested in as well. So they're things specifically that kind of really would get my attention. And the best way of getting hold of me is I'm very easy to find, right? I'm a LinkedIn connection away, and I look forward to the conversation.
That's a good one. And thank you for sharing those details. I think it's helpful for people to really get, you know, the tangible, to be tangible on that. Just another question on top of this. What, in terms of the startup stage, I know Brian usually is looking for early, I would say seed stage, correct me if I'm wrong, Brian. In your case, I believe you're looking for something early stage, but a little bit more mature, correct? Revenue. Can you be a little bit more specific there?
Yeah, look, I think every rule is there to be broken, so it's important to say that. But I think equally, what I really look for is a demonstration of early traction. And obviously, in the world of Web3, that can be very, very different to the traditional world that we were talking about of SaaS and marketplaces. You know, if you'd asked me this 18 months ago, you know, I would have typically kind of rolled out the stock answer of, well, you know, 1 to 2 million of revenue and so forth, right? And, you know, growth of X over X time frame. But, you know, but I still think, for me, I think evidence of that kind of product market fit in the form of some form of revenue, for me, is nothing beats it in my view. And so, yeah, that's probably kind of where I sit. Revenue,
or you mean a customer, happy customer, or a successful pilot? So you can see that this Absolutely. Is real, this is working, and the startup is doing what they say they're doing.
Yeah.
Got it. Brian.
Yeah, we'd invest from seed to Series A, Series B, you know, generally looking for some type of traction as well. And that doesn't have to be revenue. It can be a partnership with a number of athletes, or a large sports agency, or a team, or a league, or club. We want to know that you've got, you know, something that you've accomplished something with the business, other than coming up with a cool idea and bringing together a couple of people. Though we've invested in a number of companies pre-seed, earlier stage, while still in accelerators. So, you know, we're very flexible. We do invest later stage as well. We did as late as a Series B, Series C at times. So, you know, we're just looking for great founders, great ideas, great markets, and we'll find a way to make it work.
Would you invest, Ryan, in a founder, in a team that you haven't met in person?
Oh yeah, almost all of we haven't met in person. I'm in Atlanta, Georgia, so nobody's coming to see me here in Atlanta. We've only made 2 investments in the city of Atlanta. The other 17 investments are around the United States and around the world. We invest in companies out of Israel, out of Europe. The key thing for us, though, is we want to know that the U.S. is your core market today, not like you hope to be in the U.S. one day. You know, I've got 31 former pro athletes, mostly NFL players, and if all you're doing is cricket or European soccer or something in Asia, I can't really help you. Nobody's going to have a clue who my NFL guys are.
Yeah.
I want to be helpful and useful. And if I'm not helpful and useful, I'm not going to get involved.
Yeah. All right. I would be very curious to hear Anatoly and Justin on that. Have you invested in startups without meeting them in person?
Yeah, totally. Like basically, we started an active investment process for this particular sport tech fund in the times of pandemic. So it is by now, you know, a tradition. And of course, we try to meet the founders, you know, afterwards for some time, at least a couple of times, you know, per year, and talk to them in person. Nothing still beats the personal conversation. You can share, you know, ideas and stuff. But for the first paycheck, for the first deal, it's not a problem. If, you know, the basics are there, if you like the person, if we like the product, and if we can, as gentlemen have mentioned, if we can see that it really works somehow, you know, someone is writing paychecks, or we can pick phone and talk to a happy client, then, you know, there are no obstacles to this. I would maybe maybe I would add just one thing to this, you know, remote type of deal making, my experience is that it is a bit easier to walk away from a virtual deal. And I'm not sure if it is just our experience, or it is an experience
For the investors, you mean?
Look, for everyone, actually. So
Okay.
kind of, if you have built a relationship with a VC or with, any person, when, meeting, shaking hands, communicating, looking in the eye, etc. And then you as a founder do some kind of fuck up, well, then, it happens. Let's just sit and talk through it, etc. Right? And we will solve it. And if you want to solve it, we will still do the deal. But if the same happens, after, 10 Zoom calls, well, maybe then the 11th Zoom call will not come. It, of course,
But it's
depends
going
on the
probably
person.
to be different in the metaverse, because then they will chase you and find you.
Yes, exactly. Good note. But we
And
have not done a
probably
deal in metaverse
and probably kill your avatar and steal all your digital goods, Amir.
I shall be very careful. Yeah.
Everything, but not my avatar. No. All right. We want to jump to the questions we have from the crowd in a minute. If you want to ask questions, our panelists, please do. On the Q&A, not on the chat, please. Daniela, do we have the polls results ready by any chance? Opa! So, which Web3 vertical do you expect to grow the fastest? NFT 33%, Metaverse 40%, AI 21%, and the rest. I don't know if you can share the comment. If there is an answer, you can share with us, Tanya, later. So Metaverse, NFT are in pole position. Okay.
Amir, I was just thinking about this one when it popped up. I wasn't allowed to vote because I'm a panelist, but my view is NFTs have already had their massive growth phase, so I would have voted for Metaverse. I don't know, Justin or Anatoly, what you guys think.
Yeah, 100%. Yeah, absolutely.
Okay. I thought NFT are just in the beginning, but Brian, what do I know?
Well, still in the beginning, but they've already grown to billions and billions. Metaverse,
okay.
Nobody's really making any money there yet. So
and they have defined winners, so it is much much harder now to build a competitor from scratch. While in Metaverse, you still can do cool thing and get ahead of the crowd.
Yeah, no one's really figured out how to make money in Metaverse yet in any serious way.
Not
so
yet.
I just feel like the upside is bigger in the short term.
Yeah. Speaking about this, HYPE is holding the Sports Metaverse week alongside the World Cup in Qatar. So I'm not sure we'll make money, Brian, but at least we'll allow our brands to have a great exposure and their fans. I think it will be a first experience for all to experience a real metaverse environment. So let's see how this goes. We had another poll, Daniel. All right, what is the biggest stopgap preventing adoption of blockchain? So energy, lack of education, big time. I thought, hacks and scams, 20%.
Yeah, I mean, I think there's a perception out there from people who haven't jumped into the crypto deep end of the pool that it's all just a bunch of garbage and nonsense and ripoffs and so someone asked in the chat, in the Q&A, and I answered in there around this too. I think the regulators starting to jump in. We saw the first prosecution of a NFT rug pull, which is basically when you drop a large NFT project and then run away with the money, you pull the rug out from under everyone. And the U.S. Department of Justice brought criminal prosecution against 2 individuals that took $1 million and never delivered on the project. And, they didn't come after it as a securities violation. They came after it by saying, hey, this is just like anything else. I can't sell you a bag of magic beans and tell you they're going to make you 10 feet tall and stronger. That's illegal. That's fraud. And so they came after it there. So I actually think that if we can get a better handle on the hacks and scams and things that create that huge skepticism, I think the market can grow a lot, hit another level.
Excellent. We want to touch some questions from the crowd. So first of all, there is a question, how can you be reached? So I think Justin answered that. Brian, Anatoly?
Oh, same here, LinkedIn is always available, and I'm
right.
responding to people, especially if they write what they want and not just connect. This always helps.
Okay. And as Justin said, they do the homework.
Totally, that helps even more.
Would you provide some insights into the current thinking about token allocation versus traditional equity in pre-seed versus pre-seed round? Who wants to address that?
Yeah, I think it's a quick one. The vast majority of the very early stage deals we see are raising on safe, the traditional safe. But if you plan to have a token, you have a DAO structure in mind, it's very common to give token warrants to the early stage. And if you're working with a crypto savvy lawyer, they're going to have, templates for this. It works very easily. And that's most common at these earlier stages.
All right. Team is saying that LinkedIn does not allow messaging to you. To some
yeah,
of you.
I put my email in the in the chat, or you can just go to my website, info@thebtgnetwork.
Okay.
It'll get to me too. So hit me up anywhere, or connect with me on LinkedIn, and you can connect. My Twitter DMs are open. I'm an open book. We've invested in multiple companies, ice cold, from our website and my socials.
Okay. Any other questions which could be relevant here? Let me just scroll through. How much the revenue should be, for you to invest, Brian? If at all, you said not necessarily.
No, doesn't need to be. I mean, we generally are investing in companies that have, doing some type of recurring revenue of 50 to 100 grand, or if you're, some type of a Web3 company that had some kind of drop or token or NFTs for a couple 100,000, but it's not essential.
All right, there is another question here by Kiam, as an individual approaching you with regards to my startup. What justification would you need for valuation of the project or of the startup to start with? What are the justification you would look for?
Oh, that's there are so many ways one can justify. Maybe I can start the dialogue saying that I would expect the valuation to be reasonable. If it starts with that my idea costs 100 million, we will talk more. So just be, of course, sure of the value that you bring, but also please just check PitchBook references or something in search of some benchmarks. And I mean, if you are asking for twice the benchmark evaluation, like the median valuation for seed in US, or the median valuation for Series A in US, then please, just explain why you expect this to be twice as high as the market. And probably there is a very good answer for sure. Many examples like this. But if there is not a good answer for this, then it's just crazy.
Yeah,
I'll give a quick specific, range.
Just before this, I will add another question that I think also relates to this, and Brian, you can maybe address both of them. What is the most important metric that you will be looking at from a Web3 startups, and what they should focus on when they present to you?
Yeah, when we've seen Web3 startups that are doing things in like NFTs, working with fans or collectibles, or using NFTs around fantasy sports or free-to-play gaming, companies that have had drops, that have had successful drops to customers, sales to customers, have sold 1, 2, 3 million in NFT products, are raising somewhere in the 15 to 25 million valuation range. That's kind of what I've been seeing. So if you manage to come up with a product and maybe get a couple thousand customers to buy $1 million or $2 million worth of NFTs from you, that's going to get you valuations in the early stages somewhere around 20 million plus or minus $5 million. If you're coming before you've actually sold something to customers, then you better have, to Justin's earlier point, you better have a partnership. You better have something that makes you really, really special. I saw a fan token startup the other day, and it was 4 really smart young dudes, but they had no relationships with agents, they'd worked with a couple of very, very small athletes who I'd never heard of before. And I work in the sports space, and it just, there's just nothing to really make that stand out. It's very hard.
Great stuff. I think it's very valuable what we're saying here. I have no doubt that for the startups, this is gold. Another question is about flags. what is the most important, sorry, what raises a red flag? You mentioned a couple of earlier, I think, but let's address that. When you are speaking to Web3 startups, what is immediately raising red flags? And let's be very open and blunt, because this will serve our startups. Justin, I'm asking a English guy to be blunt, not easy. Try your best.
Yeah, okay, all right, I'll do my best. Just finished my cup of tea. So I think ultimately it's, I mean, there's several, right? There's the basic stuff of just going back to the point around doing deals over kind of screen versus physical. I'm going to just go back to that question for a second, because I am a big believer that this is a relationship between us as investors and you as entrepreneurs, right? And it's critical in any relationship to be in a position to be able to kind of fall out and to discuss, to make up, and to continue and be stronger for it. And so when we've built strong rapport with founders and teams, I wouldn't think twice about jumping on a plane and seeing them, meeting them face to face. I wouldn't think twice about the idea of bringing them into the office and spending time with them, with colleagues and so on. So I think anything that sort of kind of points to kind of the fact that they don't want that type of relationship with us and with me, and they just see it as a purely kind of transactional kind of like you're here for the money type thing, and or you feel like you're kind of you're being played a little bit in terms of like, are you a kind of make weight? Are you in a position where things that are being said and then unsaid over a period of time as well, like the goalposts move, right? That's always a bit kind of people who are like, I don't really care. You're just a bank to me, and I could easily swap you for Brian tomorrow kind of thing. I think that sort of is a red flag. And obviously all of the other kind of criteria we've kind of talked about already today. And last one, probably, being as un-English as I can. Like, if I really smell like a rat, like if it feels like a scam, if it feels like we're talking about KYC, or we're talking about regulation, and just feeling like there's something funny about this in terms of kind of really kind of what's behind it, right? So yeah,
got it. It was very useful. Thank you.
Maybe one
yes,
thing from my side. I totally agree with what Justin told. One of the things, since we mentioned multiple times that we all invest in people ultimately, I would say that, of course, it is super important for the founder to have a vision and to stand his or her ground. For sure, the founder shall have enough mental strength to go through, tough questions, etc. But for us, at least, it is also important that the founder hears reasonable arguments and concerns. There has never, ever been created a company that had no problems whatsoever. So, Google's, IBM's, and everyone, the Amazons, Pelotons of this world, all have multiple mistakes and multiple problems. And, the reason they became the unicorns is that they actually took time to notice the problem and to do something about it. So if on the first calls we see that the founder or the founder's team are not hearing at all, the risks and concerns and etc., and just saying that basically, look, it's, we don't care, it's not important, let's, it will be solved one way or another, then it's definitely a red flag, even though maybe the other things may be pretty cool.
Good. I think we are very close to wrapping up. I want to finish on a positive note. If you can share maybe one, the biggest advice, somebody asked me the biggest advice I can give to myself as an entrepreneur when I started. So the lot, yeah, I would go for study more and do your homework more, and really get prepared to every conversation to every meeting with the investor, to every meeting with the customer in a manner that he will feel that you are a pro. But if I ask you this, what's the one advice you can give people on the line? Who wants to start?
I'll start around, since this is a Web3 conversation, if you want to build a Web3 NFT crypto related company, dive in, open a wallet, put a little bit of money in there, buy some NFTs, play the So Rare game, participate in NBA Top Shot pack drops, like try the existing products, really get to know them, jump into some Discord communities, participate in the conversations, learn what it is that these other companies are really doing different and what makes them special. And you'll be better prepared to talk to folks like us about investment.
Amazing. Anatoly?
It's a big responsibility to give an advice like this.
Somebody from,
I would say, look, I would say the following, that, Elon Musk has the boring company, so maybe I will give the boring advice, which is still useful, right? As the boring company is for Elon Musk. If you look at the stats of exits in basically wherever you want to look at them, like in European Union, in the United States, then you see that like 80% of exits are done at a valuation of below $100 million or euros, or whatever currency you make. And of course, it is much less sexy than having $1 billion exits, or going for an IPO, or other flashy scenarios. But I would say that it is still an exit, right? So if you build this stuff yourself and sold it for 50 or 100, it is still a pretty good thing, and you will still give several X to your investors and good reputation. So that leads me to conclude that, even if you cannot build the new Sorara, or the new Dapper Labs, you can still build a thing if you do as Brian advised and really check those ones and see what doesn't work there. You can still build something that will be ultimately bought by those big guys, and that will make you and your investors also happy, and also help the world a bit. So, dream big, but also have, backup scenarios and multiple exit scenarios, if you will.
Justin?
Yeah, I think for me, it's about demonstrating that you have a real passion with the problem you're trying to solve, and you are as close as you'll ever be as a human being to being an expert in that subject.
Wow. All right. I think it's a good time to thank our special guest today. Thank you very much, Brian, Justin, Anatoly. It was, I would say, extraordinary and valuable. Thank you for all our guests, all our the crowd that came today, took the time. I want to maybe end up with a quick story I heard last week. Somebody asked me, Amir, there is 5 frogs on a leaf on the river, and one frog is shouting, "I'm jumping." How many frogs now on the leaf? What? 5, 4? 4? No, 5. She was just shouting. She didn't jump. And I think we need to remember, and this is, by the way, startups here, share it with your team. Yeah. We are all in the world of, there is a lot of blah, blah, blah conversations, and we talked here for a while. And in the end of the day is the actions and what you're really doing. Yeah. What we're doing in life. Registering for the application, for example. Starting there so you can pitch, and then you can start talking to these guys. Yeah, here. Great to have you on board. See you next time. Bye.
Thanks, Mayor.
Great
Appreciate it.
session. Good luck, everyone. Cheers.